A man paid $650,000 just to have lunch. Not with a celebrity. With Warren Buffett. And when people called him a copycat, Mohnish Pabrai smiled and said, yes. That's exactly the point. He built a fortune not by having original ideas, but by stealing the best ones. Legally. In plain sight. Most investors burn out chasing the next big idea nobody else has spotted. Pabrai did the opposite. He copied shamelessly and turned $1 million into a 9-figure fund. Here's how cloning actually works, and why it beats being clever. Pabrai never studied finance. He was an engineer who built an IT company, Transtech, starting in 1990 with about $30,000 scraped from credit cards and his retirement account. Then, in 1994, he read about Warren Buffett's returns. And something clicked. Buffett had compounded money at nearly 30% a year for decades. Most people read that and think, I could never do that. Pabrai thought something different. He thought, why not just copy exactly what he does? So in 1999, he took $1 million from friends and family and started Pabrai Investment Funds. And he didn't just borrow Buffett's stock ideas. He cloned the entire business. Here's the part that gets interesting. Most fund managers take 2% of your money every year, win or lose. Pabrai looked at that and said no. He copied Buffett's original partnership terms from the 1950s, letter for letter. No management fee at all. He only earned money after his investors made more than 6% a year. And even then, he took just a quarter of the gains above that line. Think about what that signals. He doesn't get paid unless you win first. That's not generosity, it's alignment. And it's a direct clone of the system that made Buffett trusted in the first place. Now, here's a question for you. Would you rather pay a manager 2% no matter what, or nothing until you're up 6%? Tell me in the comments, flat fee, or skin in the game? But the real magic wasn't the fees. It was where he found his stock ideas. Here's what nobody tells you. Every serious investor in America is legally required to publish their holdings. Every quarter. For free. It's called a 13F filing. Buffett files one. So does every big value investor. Pabrai realized he didn't need to hunt for undiscovered stocks. He could just read what the best minds already bought and study the ones that made sense to him. This is the counterintuitive truth most people refuse to accept. Originality is overrated. The market doesn't pay you extra for a clever idea nobody's had. It pays you for being right. And copying a proven, publicly disclosed idea from someone with a 50-year track record is a much higher odds bet than trusting your own hunch. Pabrai built this into a philosophy in his 2007 book, The Dando Investor. His rule was simple. Heads, I win. Tails, I don't lose much. Remember that $600,000 lunch? Here's why it mattered. In 2007, Pabrai and his friend Guy Spier bid $650,100 to win a charity lunch with Buffett. People thought it was crazy. But to Pabrai, it was the ultimate clone. Sit across from the master. Absorb how he thinks. Copy the mental models directly from the source. And it fits the whole story. From 1999, his fund compounded far ahead of the S&P for years, turning that first million into hundreds of millions under management. Now, he's honest about the rough patches. 2008 and 9 hit him hard, like it hit everyone. Cloning doesn't mean no losses. This is educational, not financial advice, and past performance never guarantees the future. But the lesson holds. The smartest move often isn't inventing something new. It's finding someone brilliant and following the paper trail they leave behind. Remember what I said at the start? A man paid $650,000 for lunch and called himself a copycat with pride? That's the whole secret. Pabrai's genius was admitting he didn't need to be a genius. He just needed to copy the right people, at the right price, with the discipline to hold on. So here's the line to carry with you. In investing, the goal isn't to be original. It's to be right, and there's a whole library of right answers already published for free. So which camp are you in? Do you trust your own stock picks, or would you rather clone the proven masters? Yes to cloning, or no? Tell me below. Tomorrow, we break down the one balance sheet number that quietly reveals a business is dying and most investors never check it.